Hi, welcome to Market in a Minute. Man, my dogs didn't know what was going on. They were all excited watching me watch the Ohio State Texas game. Manny's a good quarterback. It wasn't his fault. He looked like a high school quarterback. Ohio State's defense is just that good. And it'd be fun to watch how they do this year. Both teams, actually. I kind of think they're going to meet up again sometime later this year. So Google had a positive ruling. I don't think it's going to carry the market up any significant degree because NVIDIA reported last week it looks like they're running out of surprises. And then this week we have Broadcom reporting on Thursday. That's going to be a good barometer to watch for the overall markets as well. And then Wednesday after the close, we got American Eagle and Hewlett Packard Enterprises. We have some interest in both of those companies. So the market outlook. So it's interesting. The Commodity Traders Trading Advisor, the CTA, they track these numbers, and they're saying that this is basically an all-time high in terms of futures contracts betting on the positive side of the stock market. So we're at the 100th percentile in terms of how these traders are positioned. It's about 70 billion in assets. That's a lot of money. It's probably not alarming, but it's a lot of money if the market would start to correct and this money would start to vacate the overall market. It could have a really quick pullback based on that 70 billion leaving those futures contracts. As I mentioned last week, the market's really dependent upon technology. It's about 45% of the S&P 500 when you include the related companies in there, like the Googles of the world. So 45%. NVIDIA has been the workhorse. So NVIDIA is about 8% of the S&P and about 18% of the tech sector. So as NVIDIA goes, so goes the market to some degree, but so goes the technology sector. So NVIDIA reported last week 46.7 billion in revenues versus last quarter of 44. This is basically around in line with what the Wall Street analysts had expected, but well below what the portfolio managers and the whisper numbers around Wall Street were expecting. We were thinking they would come in about 50 billion or more. So 46.7 billion, clearly a disappointment. And how they guided to revenues as if they hit the whisper numbers. So they took out all the upside to next quarter's report. So you're not going to have a positive surprise 3 months out when they report again. You're going to have to look 6 months out potentially for that next earnings surprise. This is kind of interesting. So we kind of track this. After the first earnings surprise on a stock, usually you get 6 more after that. So this is the 7th quarter for NVIDIA. So so there was not a surprise in the quarter. So we think that surprises have come out of NVIDIA, and that puts kind of a cloud over the tech sector. And I think the tech sector and the market needs to rest at this point and or correct, come down some more. And it is September. I mean, everybody's talking about this at this point, that it's seasonally weak in this month for sure. So maybe that's already priced into the market to some degree. Now on Thursday, Broadcom reports, AVGO. Put that on your calendar for the report after the close on Thursday. This is going to be a good barometer for the tech sector. Okay, the consensus is $1.66 versus $1.24. Revenues of almost 16 billion, so up 21% versus a year ago. Now last quarter, the revenue, we focus on the revenue. That's really the real number that you should look at. Last quarter, they grew at 20.2%. So having a 21% revenue number expected, that seems to be kind of reasonable to us. So we don't see a big upside surprise coming for Broadcom. Given that there's so much money, so much hot money in that tech space, we think it's going to struggle a little bit. Maybe we hit a short-term high, probably not the high for the cycle, but a short-term high. And a lot will depend upon the employment numbers and also what the Fed does in terms of laying the groundwork to cut more than just once in September. but in the short term, we don't see a lot of upside to the overall markets. So some of the charts, this is NVIDIA. So as you know, we like the rule of three. Three important moving averages, stock moves above it, gives you kind of a buy signal as you go back above. We love when stocks set up like this. So back in April, May, this is what occurred in NVIDIA. It broke above the 20-day moving average, above the 50-day moving average, above the 100 and 200-day moving averages. And then it broke through the resistance level. We think coming back down, if it does so, that resistance level is about $134, and the 200 days about $138. It's broken the 20-day and it broke the 50-day. So we think it probably will continue to go lower based on the technicals. And if it does so, maybe it'll set up as a point to buy it, down here about $138, currently $170. So it's got a ways to go. The S&P 500, okay, so it's been in a straight up line since the bottom. It's kind of, hit the top end of the channel several times, starting to run out of steam here. It broke the 20-day 3 different times. So as another, kind of thing that we've observed over time is after 3 breaks, usually it's indicative of the market rolling over. And then the triple QQs, the NASDAQ, it's doing the same thing. It's broke the 20-day 3 different times and right around or breaking the 50-day moving average as well. And you can see right here, this was the ultimate buy point here, but it broke above the 20-day, the 50-day, and the 200-day moving averages. Now the tariffs. We don't have a tariff problem. We've got a debt problem. That's Trump's point. The problem is with the debt. He thinks it's an emergency. So the appellate court ruled against him, 7-4, that the Trump administration doesn't have the authority. And when you read the language, I get their point. He doesn't quite have the authority to do what he did. However, on the Emergency Powers Act, maybe he does. So I think he has a good point. I think the other side has a good point. The Supreme Court's going to have a tough job with this. I think the ultimate solution is just Congress to blanket approve all his tariffs that he put in place and sign these agreements. I don't think the market, the stock market, is going to get out of these tariffs. Now, the bond market doesn't like this. The bond market wants the tariffs because it lowers the deficit. So you can see here where we peaked, roughly at 4.8%. On the 10-year Treasury back at the start of the year. Now it's kind of downward trending, and looks like it's kind of bottomed out the trend of the 10-year Treasury yield going down, and it looks like it's trying to make a rally back up. So who knows exactly, right? But I think the downtrend at roughly 4.4% on the 10-year Treasury, breaking above that, so that'd be breaking above the 200-day moving average, would become more complicated for the stock market to continue going up. Don't want to see this happen. This is a big long-term negative if these tariffs go away. So in the short term, nothing's going to happen, but just keep an eye on this. If the market gets spooked about this, above 4.4, you might see it gravitate back to the old high. Okay, other things to watch. So the employment report on Friday, it's important. The market wants to see a subdued employment report, but not too weak. So if it's too weak, then the Fed's behind the curve. But they just wants to be kind of in line with consensus. No major surprises. Stronger would probably be better. However, too strong is going to cut the probability of more rate cuts coming. On Wednesday, I mentioned we're going to see American Eagle report. I'm kind of really eager to see this, to see if Sydney Sweeney actually is having any impact on the revenues of this company. Anecdotally, it looks like it, but that's not a good way of counting their sales. HPE, they report on Wednesday as well. We think this is really interesting. This is an interesting company. They're in the AI space, but not all that well positioned, and they compete more so with Cisco Systems, which is getting some benefit from the needs for networking. They bought Juniper Networks. I like that company. It's a really good company. And just the synergies of the two coming together, we think it's going to be a nice positive for HPE. And then it'll lay the groundwork as AI continues to develop and more networking is required. This could be a really good stock. So this one's that lagged for a long, long time, and it might be kind of positioned to have some nice appreciation over time. What we're hoping is they stub their toe a little bit and the stock pulls back and gives us an opportunity to really get a nice position in it. Kind of like what's happened at Marvell. Now, we have very little exposure to this. They reported last week. It was a good quarter. However, they guided the third quarter down, and the fourth quarter looks good. They guided down because AWS, their biggest customer, this is Amazon, and they kind of moved the numbers around a little bit from one quarter to the next. We don't see it as a big deal. We think they're going after a market that's very large, and they're going to get a fair amount of that market share, as well as Broadcom. So we'll have to see what Broadcom says about this. Maybe Broadcom has the same issues as Marvell. Maybe those numbers got pushed around for them as well. And then Google winning their case. So surprise, surprise, right? The Department of Justice overstepped their bounds. The judge more or less ruled against them, as allowing to Google to carry on as basically as they have been. And it's also good for Apple because they get money from Google to do their search. Google at $150, $160 a share, dirt cheap, and that was a great buy. Now it's pushing 230. We think it's fairly valued, at least in the short term. But Google is in all the really good technologies like quantum computing, autonomous driving, AI. So they have their legacy search business. That's still growing-ish, and it's going to be probably flat going forward as some of the market share is taken away from them as AI is implemented more and more and accesses some of that search business from Google. But we like the company now conceptually. We think in the short term it's moved too much. The valuation is it's fairly valued, maybe a little bit cheap, but we have a tough tech tape, or would look to buy Google on a pullback. So I'll be in New York next week at the Wainwright Healthcare Conference meeting with all our favorite biotechnology companies and going to have some really good updates for you. Oh, have you seen, by the way, Fortress Bio moving up so much? It's finally caught a bid. I think the market's starting to anticipate their drug being approved. Well, they're going to have a voucher from it. It would probably equal their market cap at this point if that drug is approved. So there's probably more upside left in the stock, and we're looking for that news announcement sometime this month. If you have any questions, come to my website, Patrick Adams CFA, and ping me. Sign up for a hard copy of Market in a Minute, and then you can see all the strategies that we manage for financial advisors or individual investors on our website at PVG Asset Management. I'm so happy football season's here, but I'm very disappointed summer's coming to an end. Take care.